The new boss of the world's biggest miner, BHP, warns if the coronavirus outbreak isn't contained soon, its business won't be immune from the contagion. BHP increased its half-year profit by 29% to 7.3 billion Australian dollars. It's good news for shareholders who'll receive an increased dividend, the equivalent of 65 US cents a share. CEO Mike Henry says the full impact of the coronavirus is yet to be felt. Mike Henry, welcome to the business.
Thank you, Rachel.
Your bumper profit comes at an extraordinary run for the price of iron ore. But how much will the coronavirus impact that price?
So you're right, it has been a very strong set of results, of course, with 46% uplift in underlying earnings per share and the second highest dividend ever. Now, that has been supported by iron ore prices. Coronavirus at this point, it does create a bit of uncertainty about the outlook, but so far the impact on our markets has been relatively muted. We're moving all of our product. Prices have held up in part because of some other supply side disruptions in the various commodities, and we haven't had any problems in receiving payment. And we have said that as long as coronavirus is contained within this quarter, we think things will hold up reasonably well through to the end of our financial year.
When we look at specifics, global car sales have been hit. For example, in China, sales fell 18% last month. We've seen all sorts of factories in that country shut down. How long before that starts to become a real problem for BHP?
So I think it's important to also look at the impact that coronavirus is having on the supply side of things as well. Both where it's impacting demand and then the impact it's having on the supply side of things. So, for example, in the steel industry, the impact has been weighted towards electric arc furnace, less so on blast furnace steelmaking. Of course, it has had some impact. So the nature of the demand side has been supportive for some of our products. And then on the supply side, it's also impacted on domestic supply of metallurgical coal, domestic supply of iron ore. So on balance, that's why we've seen a relatively muted impact in our markets. Now, as to if coronavirus were to continue much beyond the end of this quarter in terms of being contained, then we do think it could start to have some impacts, but we would revisit that towards the end of March, basis the various factors that we were seeing, not just coronavirus, but also what's happening on the supply side in the various commodities.
Is March 31 when you ring that alarm bell then? What does that look like for BHP?
So I don't think it's as clear or definitive as March 31. We continue to update our understanding, but given what we can see on the demand side, the potential for some catch-up demand in a number of our commodities. And we also have to recognize that historically the Chinese government has been very adept at providing those little bits of stimulus or pulling the levers that are required to keep the economy on track. And there's no reason to believe that this time around it wouldn't be similar.
Last year, the Vale Dam collapse really saw iron ore prices soar. Now, of course, we've got the context of the coronavirus and we will see prices change again. Where do you see them ultimately settling?
Oh, I've learned a long time ago not to try to call the next couple of quarters of prices. My sense is that the supply-demand balance will hold up reasonably well. We've been totally transparent about the fact that we believe that from the mid-2020s onwards, we will see Chinese steel demand plateau, then move into a bit of decline. We'll see iron ore come off gradually as a result of that, and that the prices in future will be lower than the prices of today. But I don't want to venture as to what they'll be in 3 months' time or 6 months' time.
Every company in the world is looking to decarbonise. BHP still has thermal coal as part of its portfolio. How are you going with your plan to be net neutral by 2050?
Thermal coal is a very small part of the portfolio, so less than 3% of assets. We own and operate one mine. We have a 1/3 stake in another. So it's not a big part of the portfolio by any means. In terms of decarbonisation, we've been at the forefront. We've had a very clear policy on climate change. We've been taking very tangible action towards reducing our own Scope 1 and Scope 2 emissions. And you may have seen an announcement in the past half about moving to fully renewable power in Chile. That's going to reduce our Chilean operational emissions footprint by 60% and our global operational emissions footprint by 15%.
Iron ore, thermal coal, just two of your commodities. Where are you forecasting growth in 2020?
If I think to the medium to long term, we've been clear in our announcement today that I would like to see us secure more options in what I've termed future-facing commodities. So we already produce some of the commodities that are going to help with the transition towards a decarbonized economy, and which will benefit in that future world. And these are commodities like copper, nickel, possibly potash. We obviously have a decision ahead of us in respect of Jansen stage 1. Whilst we have some organic opportunities within the current portfolio, I'd like to see us secure more.
Mike Henry, thanks for speaking to The Business.
Thank you, Rachel.